Good evening, traders. Welcome to the Sunday Open. It is April 26, 2026. I am your host, Craig Shapiro, macro strategist here at NinjaTrader Live. It is the last week of April. It's been a huge April for many. For bears like me, not as fun, but time. We'll see what happens. But quick look at the opening tape here, and then I'll get to the panel. Minis are opening down a touch. And so a little bit different change of character from what we've seen over the course of the last 8 weeks where we've had massive gap downs. But S&Ps are down 8 to 71.87. The NASDAQ 27.407, down 8 basis points. Russell down 15 basis points. Bonds a touch weaker. Crude up to 95.70, up about 1.5%. Gold down 62 basis points, 47.11. The dollar a little bit weaker. So kind of a mild open to Sunday here. Obviously over the weekend, some news which we'll get to. There were some scheduled talks in Pakistan between Iran and the U.S., but Iran went. The U.S. decided not to go. Trump didn't want to send his team on a 16-hour flight to get nothing accomplished. There was obviously a attempted, I don't know, I guess an assassination attempt on the president's life last night at the White House Correspondents' Dinner. It doesn't really appear that that's too market moving. But we'll get to that maybe in a little bit as well. But we are in the last week of the month here. It's been a wild April, and I have a great panel for you this evening to discuss it all. Welcoming back Sarah, checking in from Naples, Pax from Chicago, and Farm out in Southwest Arizona. So how's everybody doing this evening?
Doing good.
Great. Ready to be back. Looking forward to it.
Nice. Well, it's going to be a huge week here for markets and on the network for at NinjaTrader. So we have obviously the end of the month. We have the Fed meeting on Wednesday. We have big cap tech earnings after the close on Wednesday. Microsoft, Meta, Google, and Amazon all reporting Wednesday afternoon after the Fed meeting. So keep your head on a swivel. Get ready for that on Wednesday. Thursday is month end. So a ton to get to, and it's been an incredible month, an incredible V-bottom recovery as the war is on hold. But the markets are moving forward clearly and been driven over the course of the last several days and weeks by big cap tech. The semi-trade, semis have been on fire, with the AI trade back in vogue. And so a lot to get to. Sarah, we'll kick it off with you as we always do here on Sundays. How are you thinking about the market setup for indices as we head into the last week of the month here?
I'm kind of thinking we're going to slow down a bit, but also curious to see how earnings kind of shake out. But as far as volatility for the overall market, I think we've pretty much seen what we're going to see. I think. I don't know. We'll have to see. We are closing in on the end of the month, like you said. And this month brought a huge reversal along with the new quarter. And we talked about that at the beginning of April. Like if things were going to turn around, it would happen on the new quarter. And that's what we saw. And so we are finishing the first month of the new quarter and we're sitting up at the all-time highs. This is my least favorite time to trade. Personally, is when we are sitting up here at all-time highs. If you look at the daily chart of ES last week, it was just sideways. It was just do, like pretty much nothing going on because of that huge volatility that we got. So kind of just sideways and then a slow grind up on the end there. And this week, like I said, with us being up at all-time highs, it's my least favorite time to play the market. It's my least favorite time to be long. I'm more short biased. I'll be looking for short setups if and when that occurs, and it's not going to occur until we can break a previous week's low. So I won't even be looking to short till that happens. And then I'll just play earnings gappers this week, to be honest, because we've got all the tech earnings, big tech earnings this week, and those give good volatility. So that's probably where we'll hang out as a community this week.
Any character differences are you seeing? I mean, what I noticed, and we talked about this in the morning show a few times, is the rotation of capital back into the NASDAQ, big cap names, semi names, maybe out of some of the energy names in light of some of the crude weakness that we've had over the course of the last couple of weeks with cooler heads prevailing in the Middle East. But are you seeing anything particular on NASDAQ relative outperformance versus S&P or versus IWM. Obviously, IWM have been the leader to start the year. What are you seeing there between the indices?
I would say they're all very equal as where we stand right now. Except the Dow. YM is definitely weakest. It has not hit a new all-time high yet. But everything else has hit all-time highs last week. So everything, again, is just chilling up at the all-time highs. So, we had we call it a simultaneous break. Was that 3 weeks ago now? Yeah, 3 weeks ago. And they all did the same thing at the same time. And they're all probably going to slow down at the same time. So that's, I don't trade the Dow, but I do watch it. But it is the weakest of them all. What's oil doing? Oil's just kind of tightening up. I guess I don't know if you want to talk about oil now.
No, we get to oil in a little bit here. But I mean, for me, just the this week with earnings being such an important driver, and obviously with close to 15% or 20% of the NASDAQ reporting this week, or probably I think even more than that, all on the same day. I think everyone's going to be focused on those big cap earnings. We have the Fed meeting on Wednesday, which is really going to be a nothing done. Some interesting headlines over the weekend. Senator Tillis announced that he was ready to move forward with the Warsh nomination hearing. He had been the stalwart, kind of holding back because he was concerned about the DOJ investigation to Powell. The DOJ has kind of assured him now that they're not going to be moving forward. They're basically dropping the case, and so he's ready to move forward, which means that Warsh is most likely to be approved and not confirmed over the course of the next couple of weeks here, and likely will be in the seat for the June meeting. And so there is a little bit of a reaction and stir, late on Friday and into today, kind of a little bit stronger there. So keep an eye on the front end of the bond market. If Warsh gets in there for the June meeting, there's going to be a push for guys like him and Waller and Williams to maybe even push forward an interest rate cut. So we'll have to keep that in mind, as we think about the developments here. But yeah, I think with big cap earnings this week, it's going to be kind of top of mind. Tech has been really the stalwart over the course of the last couple of weeks here. So, but Pax, how are you thinking about the setup for this week? Any particular biases between NASDAQ and S&P, and just broadly last week of the month, a very strong month. I'm curious how you'd be thinking about the end of the month trade. Obviously, there's some pension rebalance flows that will be coming out of equities on the last day. I saw some Goldman estimates. So this may actually be one of the largest pension rebalances for sale ever for a non-quarterly pension rebalance. So a monthly rebalance, a massive monthly for sale out of equities into bonds. So keep an eye on that for Wednesday and Thursday. But how are you thinking about the setup here?
I mean, anything can happen, right? But I like 7,200 as the high. I think we can stop here and drift for a little bit, and then start to trade lower, depending, of course, on earnings and the Fed and everything else. But Sarah said something that about vol being sucked out a little bit here in the market, and if the status quo is with the war, then I do think that we kind of can churn here a little bit, or start to tail off a little bit. A little bit to the downside. I mean, it's been a phenomenal ride higher. Talk about a V-shaped recovery. I mean, just look at a daily chart. It's a V, it's a V, and just keeps running. So eventually it's got to come back down, right? Isn't it funny that he's just going to the president's going to try to engineer the Fed to push for a cut? In this environment, I don't understand that, but all right, that'll create some volatility. Anthony had said something earlier too about just a minute ago in the chat about single stock futures. This would be a great environment for those. I can't wait for those. I can't wait for CME to list those. It's going to be a real boon to independent futures traders all over this great business of ours. So I don't know. I like 7,200 as a high in the S&P. I'm very interested to see what happens with earnings and with the Fed this week. And what do we have on Friday? We have CPI, I think, on Friday at the end of the week too, right?
We have PCE on the last day of the month, which is on Thursday. On Friday, the first day of the month, we get the manufacturing ISM. We don't get payrolls this week. Typically we get that on the first Friday of the month, except if the first Friday of the month is the first. And so we get non-farm payrolls next Friday, but we'll get claims on Thursday. We'll get the weekly ADP employment report on Tuesday. And last week, that number showed an average of close to 50,000 jobs per week for the last 4 weeks. So you're talking about a big six-figure potential payroll print coming for the month of April, which would be enormous. And agree, it's with the labor market being as robust or certainly not deteriorating as rapidly as I would have thought, kind of begs the question of why the Fed needs to be even thinking about a rate cut at all. Market's not really priced in for one, but clearly once March gets in there, the president's going to be hammering them consistently, regularly, daily. So even with the elevated inflation environment and a labor market that is strong, there's going to be a push for more accommodation. It's just, it's an election year and there's going to be, move for the president. And so the lower part of the K-shaped economy continues to struggle. Why not cut interest rates? That narrative is hard to sway away. So we'll see. We'll see how that transpires.
I tweeted about this last week. I'm reading, I bought this in the airport actually on the way to Miami. I'm reading Andrew Ross Sorkin's book called 1929 about the crash of, it's a great book. And I tweeted about it because I always thought that Andrew Ross Sorkin was a little smarmy and a little bit too far to the left for me. Well, not so much anymore. But it's a really, really, really good book. And there's a lot of very, very big parallels or similarities between then and now. Obviously, a lot of things different, but there are a lot of things, similar. And exactly what you're talking about is going to be very important. Putting pressure on the Fed to accomplish a half-baked idea or an agenda. I don't think rate cuts are bullish here. In fact, I think they're the opposite. And who knows what these CPI numbers in the next couple of months are going to be. I'm not a macro trader. I'm going to leave that to you because you're the macro strategist. I'm just a trader that knows how to survive to thrive. But we all need to pay attention to what the macro story is. When the macro story lines up with your, for those of you that wanted to be long, right? I mean, you guys are looking for lows to buy. When the technicals line up with your opinion and the macros line up with your opinion, those are trades that will make your whole life. Whether it's to the upside or the downside. I think that you had the technicals on your side, you had the momentum on your side. I don't think you had the fundamentals on your side in this V-shaped recovery. But man alive, on the downside, when that shit all lines up, those are trades that will not only make your year, make your month, make your quarter, and but they will make your career. So be on the lookout for those. We all have to survive to thrive. And yeah, I'm not a macro trader, but I'm going to listen to people like Craig, and I'm going to listen to people like Tracy, and I'm going to listen to the people that they have on in the mornings, that know what they're talking about. And I'm going to take a little bit from all of them. And when it makes sense, and you see it starting to take shape in the price action, and you see it take shape, like Farm is going to tell us in a few minutes, in the technicals, and you're positioned well, all you have to do is sit back, collect, and add.
Yeah. Farm, we talked last week about how your Miami trip kind of led to a caloric intake that was supportive for markets. Hopefully, we're moving in the other direction here. But how are you thinking about the setup for this week? I know we were talking pre-show just about your great contra indicator on subscribers. And so maybe you can give a little perspective on how you're thinking about the setup here.
Yeah, I'm glad you brought up, some of the macro and flows, and specifically the liquidity or potential liquidity drain from my weight loss, which had stalled. So I was actually going to ask you a question first. I'll lead off before I get into price. But watch this 332 to 360 spot on NQ while Craig's yammering. I posted that in chat. So explain how some of the Treasury actions right now or Fed have suppressed bond volatility and what that potentially means to financial conditions and resultant liquidity in the markets.
Excellent question.
Yeah, look, we have a president who, is kind of supportive of market pricing, right? He wants to see higher stock prices. He wants to see lower bond yields, typically lower oil, a weaker dollar. And he often is a volatility suppression vehicle. And so his talking down the market, talking down volatility, talking about the ceasefire, and just kind of staying ahead of the tape has also really led to a suppression in bond volatility. The MOVE index has moved, tremendously down over the course of the last, several weeks here, kind of commensurate with the VIX getting destroyed as well. And so what you have there is in a suppressed volatility world, ability for position sizes to move higher, leveraging to go on. And so that's what you're getting here. You're getting the volatility suppression chase. You get CTAs that have been buyers over the course of the last week. You get last couple of weeks, vol control funds have been adding back again as we cycle through some of the bad returns from 1 and 2 months ago. As those come off, vol control funds are adding back exposure again. And so you have systematic funds, and we talk about this on the morning show a lot, just about the flows and the non-fundamental players who don't care about anything that I have to say generally are back and have been buying here over the course of the last several weeks. Short covering has been massive too, and so we've gotten to a point where many folks are back in a big way again, and so right into tech earnings, right into the Fed meeting, right into month end, where you're going to have a very sizable pension rebalance for sale. So, obviously things could keep going if we keep the positive momentum on the geopolitical stuff going here, and the tech earnings are gangbuster. But we've come a long way now since the March 30th. I guess that was the interim low that we had kind of ahead of that quarterly expiry.
Appreciate that. I bring it up because, my weight loss had stalled. I didn't gain weight back, but as I said from the beginning, market will need an alternative source of liquidity, and it certainly got that, right? I do, looking at the MOVE index, I think it's bottomed or it's about to bottom here, and the VIX along with it generally. And it looks like my weight wants to take another leg down. So the Fed will need to continue to suppress at least bond volatility to allow for participants to continue to leverage up, or I'd begin to be a little bit cautious here. Pretty soon, the subscriber indicator is starting to fire, so it gives me reason to be cautious. But let's be clear: like, bulls are in control on all time frames. There's no lack of clarity in that, and I'm actually going to flip over to, let's see, let's go here first. So I posted this to X, and I had this on my chart last week. Just a basic box chart. If you don't like box, that's fine. More power to you, but I just can't get enough of it. And you can see how simple this was. I mean, the initial construction can be a little bit subjective, but we traded this range, consolidated on NQ, broke that range, and effectively made a range double. We got this deep back test within the prior range at the same time that ES ended up basically with a look below and fail of its range. So that's a big part of why this happened. But like a massive excess low like this back within, a fresh range that is at all-time high, that's not bearish, right? And then, got another extension on Friday. Now, to me, this isn't the time to be initiating a long. SMH, I posted on X. I've got a big confluent extension that I posted on like Wednesday or whatever last week, Thursday. 509.69 to 510.69 roughly. I think it hit 509.59 on Friday. It doesn't mean short it, but again, like, there's a difference between an area that makes sense to initiate a long and necessarily being a good spot to short, right? Bulls are very much in control of things, but this move's a little bit extended on short time frame, so a little bit of consolidation and filling out this last range wouldn't be bearish at all to me. So this is about 169 was the top of the second box. As long as we're consolidating above there, I think that's broadly okay. It is starting to set up. I posted this on X and one of my recent posts, so you can go back to my feed, but it is starting to show some signs of setting up what I call a trapdoor setup. That was the same setup into October 10th that nuked through just a whole bunch of prior ranges. And so you can go back and read that post. I made it free with no paywall. Back from October, where I laid out, that possible scenario. So it's very premature, but it looks like it may want to set that up. I need to see how things evolve from here. We're coming into earnings, like they're probably going to be good. So we'll see how things go. But not a great spot to be initiating along, anyways. ES on the same chart, totally different look. All right, so we've basically consolidated in this range here. And now here's a risk for ES. So it does not have a similar trapdoor setup. But if we do get a failed break of this range, which Friday could have been, right, a couple of 5-minute candles below there, it's not a big deal. Don't get too excited. Plenty of places where they could kick up and stick a higher low, right? But if we do see some persistent weakness back in this range, and I'll get to my weekly chart and you'll see the levels that I'm using, 71.77 to 71.82, like just to be kind of sure. But persistent weakness below there, sure, it could come back down to the bottom. But you see that beautiful look below and fail on Thursday that made an amazing long. And then Friday, the prospective upside break. So should that upside break sustain, you can see like, yes, I mean, if you just double it, like it works so cleanly with NQ, you get up here towards 72.80. 72.69, I do have a big extension. I've got a big extension at 72.06 to 72.11. So there's some spots there, also 72.40 roughly on ES. And then there's an SPX extension that I've got actually at 72.06 as well. Same spot, but on ES. So that would translate to about 72.40, ES 72.35. So there's some spots, but I mean, if this break sustains, or even after a little bit of trappy action back in range, then 72.80 is not unreasonable at all, 72.69. And on higher timeframes, we can go higher, right? So to me, I'm not stepping in front of this until sellers give me a damn good reason. And when I drill into the 30s, hopefully that'll help. So go back to my NQ chart. So take note of this profile. So this is clearly the pregnant kangaroo volume profile. That's from chapter 69 of your classic volume profile textbook that I've not yet written. It's kind of a bizarre ass shape. So, if you look back at that box chart, it wouldn't surprise me if we consolidated in this range. Above Friday's low, I think is completely fine and it's constructive. I mean, let's at least wait till sellers take out a prior day's low before we try to put our bear hats on. So that would be constructive down to 150 to 169. The first order of business, though, immediately for both ES and NQ, NQ just right here, this 332 to 360 had multiple sets of single prints on Friday. Very strong look. So getting back through that range is like, it shouldn't happen. So I posted, I will say this for my plan for tomorrow, that if we fully expect something to happen and it doesn't happen, then it's time to pay attention, right? So if Friday's move is given back, then it looks a little bit shitty. But at the same time, I do still feel that we could consolidate broadly above this 150 to 169 and be fine. So I'm watching for, holds here for longs. I posted that in the chat. I might have done this on stream. I don't know. It might have happened. Even a push through there that reclaims is just going to be long back up towards Friday's high for continuation. So continuation higher speaks for itself. We just go higher. We have upside targets. We've got 72.80 on ES, 72.69, 72.40-ish. No reason to fade until that's given back. The risks do come in. I'll flip over to ES. So again, I'm going to use 77.82 to give it the benefit of the doubt. The actual absolute top of that multi-day range that we traded in here was 85 3/4. So there is some risk of coming back down through range. So that would be a compound outside bar for Sarah. So she would love that to come back through this range here. I do think 67 to 69. I mean, that carries last week's value area high. So if sellers can't even get back into value from last week, why are you bearish, right? So the risks sort of increase as we lose each spot, right? Potential rotation from 67 to 69 back, arguably to 71.15 half to 71.21. And then guess what? Congratulations, sellers. You got all the way through there. You're just now getting towards this prior range low. So a failed break of a range high is one thing that is okay, that kind of sucks. I guess buyers aren't as strong as they were last week, the week before, but it's not necessarily bearish until you actually break a range to the downside. We have a failed break of range to the downside with an excess low that's longer than my wife's stories. Again, not that bearish, right? So if we come down
wider
here,
than what?
You missed such an opportunity there, Farm.
Yeah.
Longer than my wife's stories. What?
Okay.
Yeah, anyway, so if we come down here and we just dip into this excess, right, below 71.15 half roughly, and we find reactive bids, it can zip right back up. So, it's going to take a few steps to really produce anything meaningfully bearish here. But I would be a little bit cautious if this range break does not sustain, which as of now it's not. It could be potentially problematic, and maybe we see some corresponding weakness or at least healthy consolidation in NQ. So that to me is going to be the major order of business really all week, right? I mean, do we come down and do some trappy action within this range? in which case you can be short on the way down, right? Persistent weakness below 77 to 82. I think that's fine. I just think you have to be looking to cover on the way down, treat it as a rental on any kind of a short, and then potentially look to flip long. I mean, they're going to mess around with this thing big time into tech earnings, into FOMC. Like, it's not going to be easy, right? So, whatever happens, like, just assume it's a trap until then, right? Just make your money, get in, get out with day trades. But that's kind of the biggest spot I'm looking at is 71.77 to 82 on ES. And then 71.15 to 21, roughly. It's very obvious, clear defined range there. Let's see which way we break. And then everything in the middle is a little bit of F around and find out. You could trade this both ways. Again, risks of a failed break are seeing the other side. We could come all the way down to this past week's low. And then all of a sudden you're like, oh, well, shit. What happened there, I suppose. But we still haven't lost it. Last week, sellers needed to get back below this 78 to 81, the same spot we talked about on Sunday. They did not do that. And what do you get? Higher prices, right? So until or unless you're taking out a prior week's low, you're overlapping, gapping value lower on a weekly basis. Now we're talking about potential intermediate time frame changes. We have not seen a daily higher low this entire move. To me, that requires an actual downtrend on a 30-minute chart. I mean, like, you could kind of like call this like it made a slight lower low, I guess, and like maybe a slight. This is just a range, right? It's just a box. So show me lower highs, lower lows on a 30-minute period to even be eligible for some kind of a daily higher low. We have not gotten that yet, which is absolutely wild. Even when that does happen, bulls still have like a mile to buy a dip. Like a 50% retrace is like in the dungeon, like prices that would like floor most bulls that are getting long up here, but it would be like wildly healthy. So, bulls are in control until proven wrong. We may have some opportunities on both sides, given where SMH is and that extension, NQ being a little bit extended, ES possibly failing this break to the upside. So eyes are open this week. It could be a very fun week and an opportunity to trade both ways, but we know we're not going to have any answers until all of these catalysts are out of the way, what direction we're really going.
Yeah. Well, if you are new to the Sunday Open, what you get from us is the traders going around the horn. We typically like to touch all the different asset classes. So if you have any questions for us, make sure you hit us in chat, and we'll definitely look forward to it and then address it. You also get Farm's comedy throughout the course of the episode too. So you get double bang for the buck here. But wanted to just flip here to the sector breakdown, and there's been some discussion about these single stock futures, which we're hopefully going to get over the course of the next couple months here. And I think what people are so excited about is the dispersion, right? You're seeing, there's often days where we talk about NASDAQ and S&Ps as being quiet and not really doing much, and all the action is under the hood. Different sectors really moving, or different individual names. And you can see here on the month to date, I mean, obviously the moves have been massive, right? I mean, semis have really led the story this month, up 32% on the month, now up 41% on the year. NASDAQ's up 15% this month. XLK, which is big tech, is up 20% this month. IWM is up 12%. And then on the flip side, you get energy, right? Energy, not surprisingly, with the war stuff coming off the boil, a little bit weaker, down 7.5%. XOP is the E&P index, and XLE is the big cap energy names, down 7%. And then here's just under the hood too, just the individual names. I mean, some of these moves are just, I mean, they're out of control. Micron up 47% this month. Avago up 36% this month. Amazon, Nvidia. I mean, these numbers are massive, and so the opportunity to trade these names with futures, hopefully later this quarter or in the third quarter, I think is going to be great. We're going to be doing a lot more programming around that this Wednesday. We're going to cover the Fed live at 1:45, and then we're also going to cover big cap tech earnings after the close on Wednesday too. So stay tuned for that. And then on Thursday we have a end of the month battle here during Trade the Close with some of the traders. But Nick Lentz and I are going to come on earlier before that as a warm up to talk about some of the things that we're seeing in single stock land, just to kind of whet people's appetite for what might be coming down the pipeline here on NinjaTrader Live. So certainly stay tuned for that. We are about a half hour into the Sunday Open, and indices are moving a little bit weaker now. S&Ps are down 18 handles to 71.77. NASDAQ's down 65 handles to 27.369. Russell down 45 basis points. Oil up. We'll get to oil next with Sarah's charts up to 96.60, up 2.3%. Gold down 84 basis points to about 4,700. The dollar a bit stronger, bonds a bit weaker. We'll talk with Pax about bonds in a little bit too. I mean, basically what we have is, unfortunately, the highly correlated asset trade is back here for the Sunday Open, although at an intensity that is a little bit less than what we've been used to here over the course of the last 8 weeks since the war started. But we'll see. We'll see how things transpire. The other thing we have this evening is the president is speaking at 7 o'clock or sometime in the 7 o'clock hour with on 60 Minutes. And I have a 5-way parlay going about things that he is going to say. My 5 things are: 1, Iran begging to make a deal; 2, we're the hottest country in the world; 3, Xi is a friend of mine; 4, ballroom; and 5 is too late Powell. So root for me for that 5-way parlay to.
Is this a new parlay, or is this the same as your old one?
I hit the other last week. I was 5 for 6. I only went for the 5 for the 5-way this time. So we'll see what happens with the president at 7 o'clock. But look forward to some headlines there. But speaking of headlines, the war. Not much momentum over the weekend between talks from Iran and the U.S. The president seems to say we got all the time in the world here. Not really too much of a rush. The blockade is working according to him. Nothing's getting out, although some oil is getting out. So who knows? But oil is up 2.3%. Sarah, how are you thinking about the oil chart here, and what is the setup telling you for the week ahead?
We'll get to oil in just a second. I was looking at Chat GPT and asking it, when was the last time SMH was ever up 32% in a month? And the answer is never. So that's just a cool, fun fact.
Historic, yep.
Yeah.
Hey, I traded a NASDAQ rally. I was short 28 big NASDAQ contracts in a rally that went 26% in a day, in 5 minutes, in 10 minutes.
When was this?
January 3rd, 2001. It was the biggest rally in stock market history. The biggest one-day rally in stock market history is the NASDAQ. The day that Greenspan cut interest rates in the very first trading day of the year. I was short 28 big NASDAQ. We rallied 650 points in 5-10 minutes. It was
January 3rd, 2001. I'm see if I can pull that up later. That'll take me a while to get to. Okay, oil. Where are we with oil? We are still stuck in this big 2-day range like we've expected to be and will be for a long time. But we've got an internal broadening formation happening. You can see I've got it drawn. It's kind of ugly, but if you smooth it out, your broadening formation kind of looks like this. So we just made lower lows to these guys back here. So anybody who had been long since 323 got stopped out. When was that? 417. And we're making our way back through the range and up. So we are closer to triggering an inside week and up reversal. Let me delete this so it's cleaner. So last week, oil closed as an inside week. And as I just mentioned, we made lower lows to this low here. So we would be looking at it as the bottom of our broadening formation. And then we would look to trade up and back through, this range. So as long as we can stay above last week's highs, which is 98.39, you would want to be long. If you're not above that, you would want to not be long. And that's pretty much plain and simple, long above that line, short below it. That's all I got. Pretty easy.
What's interesting is there's so much focus on front month crude contract daily, even though that's not that's where a lot of the futures volume is. But the impact on the economy and on players, buyers and sellers, often out in the back and within refined products. I think it's just interesting. DEIS 26 crude is, and we've talked about this before, is so much closer to the high than not, right? So basically trading up another 1.5% this evening to a little bit over 78.37. The high back on the March 23rd was 81.01. And so we're, we're very close to those highs, still here on deferred crude. And then, on gasoline, front month gasoline is making highs. Wholesale gasoline is at 351.40, which is a high for the move today. So there's been no correction in gasoline at all through this period here. So what we're seeing is you're seeing the impacts of the Strait of Hormuz being closed, kind of moving through the supply chain, right? It starts with crude, now it's moving into refined products. That's where prices are stickier, and then that's going to move down the channel even further, and that's why the inflation concerns remain top of mind for the Fed, but also for the consumer, right? A low-end consumer wallet share is incredibly strained, and so that's an impact on the economy into the midterms and for the rest of the year. And I think, from my perspective, I think that's part of the reason you're seeing this push back into big tech and out of some of the more cyclical areas. Some of the smaller names and some of just the broad value names are underperforming again here in favor of the secular growth story that is the AI CapEx story. So it'll be interesting to see how that plays out. But Pax, any particular interest in crude or any levels that you're watching here, or anything, any signals for how crude might impact your equity trading?
Well, I mean, if crude starts to rally above last week's high in 98.39, then I think that we'll see a sell-off in equities. But that's it. Crude has been a great opening range trade. The ATR in crude is like $8, depending on what you're looking at. $5 if you're looking at the RTH, but like $8-9 in extended trading hours. And and so the opening range has given us huge swings every single day, and has given us really, really, really good dividing lines. So, like Sarah said a minute ago, long above and short below it. But if we take out last week's high at 98.39, then I think we will rally back up to the open of the previous week at 103.56, or maybe a week and a half ago, 2 weeks ago. Seems like a week ago, but 103.56. And if we can get back above there, then it's back up to 109. Back above there, it's 119. I think we're kind of, we're just going to bang around in the range until we find out what happens, So, I mean, crude has found its wartime range, $95, 94 to 95. I think anchored VWAP comes in around 94 and a half, $95, which is no accident. So, just kind of, if you're going to trade crude, and crude has been a great trade. The opening range, by the way, on crude is at 9 o'clock Eastern time. So everything is staggered. Keep your eye on it. It's a great trade, and it'll give you the ability to keep your expenses tight and relatively small compared to what you can earn when the market does get up and go. But I'm really not interested. I would rather intraday swing it and see if I can catch some runners that way than to look for a bigger swing trade. When the ranges contract, when we come back down to the 60 or even 70 handle and the ranges contract, then I'm not going to trade crude from an opening range standpoint. Then I'm going to trade crude from swing levels. But with this volatility, it's a great opening range trade. So keep an eye on it.
Yeah. The thing, Farm, you mentioned before, just about volatility and volatility suppression, and we are starting to see oil volatility come in as well. Kind of the oil VIX has gone from a high of about 120 earlier in March down to about 75 now, and so we're starting to see oil's getting a little bit calmer. Indices and bonds have gotten a little bit calmer. The reaction to these headlines on the geopolitical stuff is waning a little bit here, but anything can happen. I mean, if we start seeing missiles flying again for whatever reason, that's clearly going to lead to a volatility pickup again. But is crude anything interesting on the crude charts from your perspective? Any insight there you can glean on whether or not that helps trade equities or just even crude itself? Is that something they're looking at?
Yeah, I mean, I think crude has definitely made a good trade, like Pax said. The correlation with equities has definitely not been as strongly inverse as it had been, right? So just because you see an up move on crude clearly has not meant get short equities, right, yet. At some point, maybe it matters again, and you'll notice when that correlation really starts to pick up again. You'll even see VIX respond to it. if and when that correlation is there. Last week, we talked about that contract roll gap, potential for filling it and basing back above it, and that's what we've done thus far. Same 91.69 to 93.19 spot that actually it was 93.07 that I've had for like months at this point, it seems like. We've now based back above there. Agree with Sarah that ultimately we'll have to bid last week's high. This 97.40, 97.96 is sort of sitting right there. And yeah, I think basing broadly above this range probably scoots back up 102.69, 103.69, cleans up some of this thin structure from the trailing week. I do think if we get back below 91.69, and more specifically back below 90.32, basically where that contract gap sat for a couple of days or whatever, then you'll probably see, continued weakness in crude anyways, and maybe that helps with a supportive bid for equity. So I kind of like longs on it as long as it's above this 91.69 to 93.07 range broadly. I'd be looking to buy dips up toward last week's high. And then if I can balloon runners through there, then I'm happy and can consider adding, right, in that situation. So I think it broadly looked constructive for now. I mean, like, who knows with these headlines? It's been pretty crazy. But that's kind of my bias on crude, is a little bit higher from here. Energy looks good to me. And the only question is going to be, do equities care or not yet? And like for me, this has just been a huge positioning unwind and positioning rewind. We had in the positioning unwind to the downside, it almost seemed like it was more in like currencies and rates, things of that nature. There's a lot of longs in equities that just held and hedged, obviously overly hedged at times. But now we've certainly seen that rubber band snap back the other direction. CTAs getting it just about all of it in. NAIM, retail adjacent, kind of between retail and hedge funds, is back up at 94. Most of the money's getting it in long here. So generally that's the time I start being a little bit more cautious with longs and feeling like, okay, we're probably getting pretty close to getting all the money in here, at least in the short term. Again, like there's miles for equity bulls to buy a dip, defend a high or low. So, just because, like, believe it or not, if you see like the 5-day simple moving average or like even the 10-day, it doesn't make it a bear market. Like, it's okay. I know calling for that makes you a perma bear. But like, if we see that, it'll be okay. I promise. If we see like the 5 or 10-day simple moving average, it'll be okay. So that's kind of what I'm looking at. I do actually have some interest in trading crude, even though it is still inside this trailing week's range. It does look like it has potentially an opportunity to break last week's high, as Sarah mentioned, the inside week to the upside to clean up some of this poor structure. So I might find myself interested there.
I think what you've been getting a bit of is this U.S. is relatively better off than everybody else in a high energy price world because we become a crude exporter, because we are an LNG exporter, because U.S. manufacturing companies can buy cheap natural gas and trade globally against companies who buy more expensive energy. And so that dynamic of U.S. outperformance, I think, is why the U.S. equity market has been more resilient to headlines and to this elevated energy environment. We'll see if that lasts. I think you're going to start to see more divergences as the weaker parts of the economy and the consumer related names, the longer we're talking about $95 oil or deferred crude close to 80, gasoline, wholesale gasoline up at 350, retail diesel up in the mid fives, you're gonna have strain at the consumer level, and so that's gonna get filter into various parts of the equity market. But is it going to impact Micron and Nvidia and Meta? And probably not, right? I mean, the AI trade has become a little bit like the Teflon Don here, not really impacted for now by the elevated energy price environment. So then a quick look at the tape here, kind of quiet since the last update. S&P's at 71.79, down 15 handles. NASDAQ down 50 to 27,385. Let's shift to gold. Gold's been on the highly correlated with stocks lately. Stocks up, stocks down, gold down. Trading more like a risk asset than a risk off geopolitical asset. Here, trading a little bit below 4,700 now in front month. Sarah, any thoughts on gold? And we can also talk about silver if you'd like to.
Yep. So gold, what's going on? Gold closed last week as an inside week. Let me look at some higher time frames real fast. Ugh. Majorly stuck inside the previous month's range. We also talked about how gold and silver were really, really slowing down relative to like other things that are moving in the market, and that still is the case. We've only got 4 trading days left in the month, and we are this little tiny doji. This is a monthly candle. So no interest really right now until maybe next month, till we can get an equilibrium break of that inside month. And silver is the same way. We're just kind of stuck trading sideways, not really going anywhere till, we can get a break. We do have inside weeks on gold and silver. They closed last week as an inside week. So you could play the break if you wanted. It looks like you're closer to breaking to the downside, which means you could be short below 46.72. And then your target would be there first, 46.26. And then silver is the same setup. So maybe they break together. And this has a bit of stacked pivots down here. You've got a bunch of pivots. But again, I don't know how much it's going to puke because it might be waiting for the new monthly candle to open before it actually does start puking. But if you're below it, you can be short it. I don't have any interest in it right now, but that's me personally. I'm more curious. I was looking at the earnings like after hours on Wednesday is going to be great. You got Microsoft, Amazon, Meta, Google, Qualcomm. So stuff like that. I'm more interested in that stuff, things that are going to move rather than things that aren't moving.
Yeah, precious metals have kind of fallen, obviously were of extreme interest to close 2025 and to start of 2026. And we had been talking about, them ad nauseum. And then I remember typically on the first of the month over the course of the last, I don't know, countless months. I know Anthony talks about this regularly is the first day of the month we've been seeing up precious metals regularly. So it'll be interesting to see later this week if we get an up precious metals day on Friday. But Nasdaq and S&Ps have made new highs with with the risk on tape that we've seen. Precious metals is really no reaction, not a similar reaction at all. So a reasonable negative divergence there, as investors are more constructive on equity risks than they are on precious metals keeping pace. Pax, any levels on gold that are of particular interest for you here, either direction?
Well, the dividing line in gold is 48.60, and we've been talking about that for a month or so. We were talking about that, or I was talking about it when we were trading at 42, 4,300, that's where gold wanted to trade. And then when we got there, I exited swing longs and I wanted to be short from there. I'm not short from there, and I kind of regret not being short from there, but that's where you're going to be short. And we talked about that, I don't know, 2, 3, 4 weeks ago or something in the show. So I like Sarah's levels. If you guys are short gold, look for 46.72 on the downside, add through it, take it to 46.26, add through it. Underneath there, we'll go to 4,500, 44.98 or 44.92. Let me be precise. I mean, it's 4,500, big round number, but the exact price is 44.92. So look for that. That's the ultimate swing goal on the downside. But I don't know. I do think it's interesting what you said, Craig. It's very interesting. Is that it is trading? It really is trading like a risk. How did you say it? It's trading like a risk asset, not a risk off asset.
Yeah.
Yeah, and that's how I see it too. Tuesday we had a nice break in the S&P. We went from 41.7160 to 71.85, and and then kind of rallied back. And I talked about the late day trade in our group from 71.22 down to 70.94, and that was a really nice trade too. But we caught that because I started to see the bonds sell off underneath, and the bonds sold off a point Tuesday. Nobody really talked about that, but the bonds sold off from a high of 114.28 down to 114.27. So while the bonds were selling off and then gold started to sell off, it looked like a risk off event, and the indices hadn't moved. And everything else was starting to, and I don't know if I mentioned that crude was rallying. So crude was rallying, bonds were breaking, and gold was breaking. I wasn't paying attention to the dollar. And the S&P was sitting at the opening range low, and so it was free money. It was a free money trade, and it was down to 71 or 70.85 was the low. So I'm going to be looking for little swings like that, using gold as a risk asset. When spoos break, when gold breaks, spoo break, and they've been kind of trading hand in hand a little bit in a correlated sense. So I'll keep looking for that until it stops working. I don't have any real levels until we get to 4,500. So I like those. I like Sarah's levels to be able to define risk at, and to be able to keep your stops tight so that you can manage your stuff.
Yeah, there's a little bit of a sell in May, go away dynamic in the gold market for sure. May is the worst, second worst performing month over the last 15 years. September being the worst with an average down 156 basis points. May is the second worst, down 98 basis points on average over the last 15 years. And then June is also typically a down month as well, down 20 basis points on average over the last 15 years. So a little bit of a negative seasonal dynamic here developing for the gold market. Maybe it's just, it gets quiet. People are tired of it. Strong first quarter. That's where you typically get all your gold returns. Best performing month for gold is January. And then, February, March, April is, on average, those 4 months in a row are green. So maybe it's a little bit of that, but Farm, any interest here in gold or silver in either way?
I mean, so first of all, I'm pretty sure the wife wanted 90 seconds of my time later, and now you made me look at this gold chart. It's just, I'm not into it. It's not going to happen. It looks kind of gross, like Sarah said. But I'll tell you what I would want to see. You have a good low. You have a good high.
Right.
So you have an expansion pattern, and now we have compression within that expansion pattern. You've got like the crappiest attempt at an internal broadening formation here that I've ever seen. For me to get interest, I would want to see either this low taken out, right? So this past week's low taken out and start to come back through range, or I'd like to see it hold here, and probably I'd really like to see it come up and take 4790.8 and give us that internal broadening formation. So when I see good high, good low in place, and I have a higher time frame broadening formation, I am looking for compression as it consolidates, and then I'm looking at failed attempts at expansion within that range. So I would like to see it pop 4790.8 roughly at least, and then start to come back through. And it's just going to loosen things up a little bit and make for some better trades. Similarly, it would be okay to take last week's low and come back up through. I've got some levels that I haven't bothered to touch because it hasn't been interesting to me. Take one of those two spots first. Let me see how it behaves, and then I might become interested.
Yeah. Pax, you were mentioning the long bond or just the long end in general. What are the keys there you're looking at? I still find it fascinating that we sit here kind of 2 months after the war started with oil being reasonably higher than it was at the end of February, and bond yields being reasonably higher as well. And equity indices, risk assets are largely not caring about that. Are there key levels here you're watching here on for the long bond that may trigger some more concern in your mind?
Yeah, underneath 113.10, then we'll trade back down to the lows. The low that move, which off the top of my head I think is 111.11. So in between 113.10, I'm just a spectator, isn't that what they say? I'm just spectating. So with the 30-year trading between 113.10 and really last week's high 114.28. I don't want anything to do with it. And actually 115.02 on the upside. 115, the pivotal price area is going to be 114.28 to 115.02. 115.02 is the yearly opening range, and 114.28 is last week's low, and the high, and the high of this move, really, the high of this last leg up. So anything between 113.10 and that level, I don't want anything to do with it. You guys were talking earlier about suppression of bond volatility, and we've got that. So it's definitely what you guys all need to be able to start to watch the 30-year, or the 10-year. I mean, whatever makes sense to you. The only reason I watch the 30-year is because that's how I was taught, and coming up. I think a lot of you guys would prefer to trade the 10-year. But anyway, you can, the both those markets are great for traders because it's easier to get the edge trading the bonds or the notes, the 10-year notes, than it is to trade S&P or NASDAQ without taking an expense. And by the edge, I mean specifically buying, for example, the bonds are trading 113.27 bid, right? I can join the bid, get filled, and it'll stay bid. I've got the edge when I buy the bid. I've got the edge when I sell the offer. That is the simple explanation of edge. Being long the bid, why? Because you can scratch it. Being short the offer, why? Because you can get out of it without an expense. Does that make sense? And it's pretty manageable to do in the bonds. In the SPOOs, or the S&P, it's a little harder to do. If I sell 71, 80, 81s, if it goes 80 offer, I'll put a scratch stop in, then I've got the edge. But if I sell, I can sell the offer, and that market is bid 3-4 points in my face in a minute. So anyway, I mean, that's how we've always defined edge. That's how edge is defined objectively. I think you younger traders all like to define edge in a subjective sense, but that's it. So the bonds are good for that. But anywhere in between this 113.10 to 114. I'm dyslexic. 113.10 to 114.28 to 115.02 is just range bound trading, but keep an eye on it because it will telegraph. The bonds will telegraph a move in the S&P before the S&P or NASDAQ move. So keep an eye on that, my brothers and sisters. Keep an eye on that.
We have front-loaded auctions this week. We get twos and fives tomorrow, 69 billion of twos and 70 billion of fives, and then we get 30 billion of floating twos on Tuesday and 44 billion of sevens on Tuesday as well. So a lot of front-loaded treasury supply this week. And then I suspect next week, because the tech earnings are this week, we're probably going to get investment grade bond issuance from big cap tech again next week. So, look at some heavy supply pressure there on fixed income markets. But coming up on the top of the hour here, last look at the tape, S&P's 71.81, down 13 handles, NASDAQ down 41. Crude up 1.8% to 96.11. Last but not least, before we kick it over to Trader Mean and Ponzi Trader for the crypto closeout, just want to look at the Bitcoin real quick. 78,383 last. Sarah, any big thoughts here on the Bitcoin chart before we kick it over to the experts at 7:00?
Yeah, so we have broken the inside month and up. So for the rest of this month, I would expect upside, but maybe next month we can get some downside. But if for that to happen, we would have to break last week's lows. So currently, I mean, sitting bullish, we've hit the monthly target already. So I still like the lower level, but we can't get there till we get there. And we can't get there till we get a red monthly candle, and that's not happening this month. So like I said, maybe for next month we can have that happen, but right now the chart is bullish, and that's just the way it is.
Yeah, I would have thought, I mean, given how well equities have done on the V bottom, I would have thought Bitcoin would have performed. I mean, it's obviously performed well off the lows, but I don't know, it's not really giving the oomph like it usually does in a risk on tape. Any thoughts on that? Either Sarah,
we're getting there.
Yeah,
we're getting there. The breakout was above 74,000, and we finally started to close significantly above that. So we should see some new cash inflows, U.S. dollar inflows, isn't that funny, into Bitcoin, and that should propel us back around 94 eventually.
Farm, any Any closing thoughts on the Bitcoin here?
On the Bitcoin, now it's going to be a 3-month balance. We're coming into the end of April, so to me, there's not really a whole lot of point in doing anything here. So take April's high. If we see a failed break of April's high that comes back down through February's high, I'm not looking at the chart, then maybe we could come back down through range and see a little bit of weakness, at least for a potential buy the dip opportunity. But monthly one-time framing down has ended. And so it becomes a lot more reasonable to me to then look for the next dip to buy. If we do break April's high and the top of that 3-month balance, I think you got to wait before you step in front of that. It potentially could see some significant upside from there. So that's what I would be looking at come the start of May.
Nice. Well, action-packed week coming up this week, as we've discussed. We've got a lot going on with the Fed meeting, the geopolitical stuff, all the big cap tech earnings. It's going to be, it's going to be a wild week here, guys. So keep your head on a swivel. Last week of the month ends on Thursday. It's been an exhausting month for someone who's a little bit more risk off than risk on, like myself. But I'm looking forward to us moving through here. So, but thanks again, guys, for joining us on the Sunday Open, and we're bringing it next into the crypto closeout with Trader Main and Ponzi Trader. So let's get cracking.
Yeah.
Yo,
What's up, everybody? Trader Main
dude,
and
I
Ponzi
almost
here.
wore the same hat. I'm so glad I didn't. I almost wore the
Were
same
we-
exact hat,
We
bro.
texted about matching and you just didn't respond, so I just assumed we were on.
Sorry, I won't interrupt the intro. Run it again.
That's okay. Guys, welcome back to another episode of the Crypto Closeout with Ponzi Trader and myself, brought to you by NinjaTrader Live and Kraken. Dude, potentially finally getting some volatility here, hopefully. We obviously saw equities V-bottom over the last 3 weeks in a straight line from 6,300 to new all-time highs. And crypto in typical fashion, lagging. Whether that is lagging due to just lagging or lagging because it's simply weaker, which has been the case for a very long time now, it's looking, kind of promising. As they touched on at the end of the video, our counterparts there earlier, we're above 74K now. Looking at the weekly chart, this weekly candle looks like it's going to close above this kind of consolidation swing high here. So for me, 74 kind of was a big level. It was that former range high as well. And we're holding above here for now. Could this rally into lower high? Of course, there's still some similarities to, what we saw in this last consolidation here, albeit I think this structurally looks a little bit better due to the environment, just being a little bit more risk on right now. But I don't know, man. We had an attempted assassination on Trump yesterday. The market didn't even sneeze. What do you think? Do you think it's finally time for this to trade back into the 80s?
I mean, I think we're closer to the high of the move than the low of the move. Honestly, I'm expecting 82 at the highest. If we flip 82, then we can talk about higher prices. Honestly, if we flip 82, we're probably going to rally to some pretty significant highs. And significant to me would be, I don't know, like 105. That would make for a proper lower high at like a macro 3-day structure. Pax wants to hear about Coachella. Maine, how did you enjoy Coachella, by the way, since we couldn't attend our show and we got covered for it?
I had a blast. I think it was a lot of fun. At the end of the day, it's like just a ginormous festival. And I think there's an aspect of just clout going on there. Like you want to be seen at Coachella and that kind of thing. But I had a good time. I thought the music was good. I think the Kraken team did a really good job organizing the entire event for us. But yeah, no, I had a blast, man.
Dude, I don't really like this current structure that we have on these higher lows. Like they're way too orderly. This is like a classic stair up, elevator down type of pop, and then one of those. I feel like we see these a lot. This is when the late long starts to chase. a little blow off into 82, followed by absolute mega mind pain down to the 60s or something ridiculous. This is obviously dramatic, but not like my favorite price action. It's just hard to like take on any risk.
I mean, I've been trading this range pretty well, but I've been keeping it super simple, which is, every time we came into the mid to low 60s, I looked for longs. And every time we got to like 74, 75, I started taking profit. So I actually have no interest in being, heavily positioned one way or another here. I'm still holding a small portion of my long from mid 60s, and I've hedged actually with an Ethereum short because ETH is kind of putting in lower highs for now, where Bitcoin's been putting in higher highs. So a bit of
I don't know,
divergence
dude.
there.
Chart looks good. The single line based analysis. This is like the strongest analysis that anybody can do in any sort of asset, and it tends to be my favorite when you get like a little throwback to retest it and then some bullshit like that. It's been working fairly well, but I mean it's like it feels like we're out of the woods from like a technical perspective. Like if you look at all these charts and you had no other sort of macro bias or narrative bias for what's going on in the world, it looks good, but it's just I feel like we're walking on thin ice, dude. What do you think of this move on indices to just new highs? Like this
wasn't expecting this at all. I was expecting a rally for sure, but I was expecting a rally into the lower highs. So if you look at like the Dow, this is kind of more what I was expecting for the S&P, was a big move down and then a rally into a lower high. Not that this is confirmed a lower high yet on the Dow, we don't know. But I don't know. I'm at a point in my trading career where like I have the luxury, I guess you could say, for waiting for opportunities where I feel like not just is a setup in my edge present, but I have extreme confidence, in the setup. And I feel like those opportunities have been few and far between of late. We've had this kind of ongoing Middle East quagmire for months now, with crazy volatility in both oil and equities. Bitcoin's been kind of trading in one of these, grindy, bear flaggy structures where it's like, okay, is this different? Like, I mean, half my feed is like bear flag's not going to bear flag. Like this one's different. And I can see an argument for both. And so whenever I can see like a pretty clear argument for either situation, like I tend to wait until there's more information. Like one of the most compelling, speaking of single line kind of, analysis, is I believe it was Don Alt, just kind of a line on, the old highs here. Yeah. And it's like whether you want this exact level or you want to kind of incorporate the old all-time high, we're trading right above that. Looks like this is just like a deviation. And you could kind of say, okay, as long as we're above 72, it looks good. Whereas, if you mark it out like a bear flag, you're like, oh, we're at the range highs here, you can make an argument that it looks kind of crummy. So when those are the instances, I don't have a trade here where I can clearly define my risk, clearly define my entry. There's no setup for me, and that's okay. And I think crypto being 24/7, 365, constant action, at least especially when the market's bullish or volatile, people really struggle with the idea of not being in trade, even though that is a trade in and of itself.
Yeah. There's something where I think we are in equities is in a similar spot to where Drunken Miller. I saw a clip of Drunken Miller talking about in the 2000s, he ended up going full cash, and he was up a few yards in profit on that entire bubble, and he was certain that it was the top. Within a few months, he ended up redeploying all of that cash, and he ended up losing $3 billion. And he was correct the first time around that it was the top, but he ended up FOMOing back in, thinking that the rally was going to continue. And, he gave back 3 yards of profit, which is pretty absurd, especially for the 2000s.
Suzu did that too. People forget Suzu 2021 run was insane. Ran it up to, 18 billion or something like that. He actually sold in and around the top and just rebought too early. So again, you can call a top, you can sit in cash, but execution is everything. And rebuying too early, rebuying too late, selling too late. These are the decisions that kind of make or break your, investment career, your trading career. It doesn't matter how good your analysis is. So I've gotten a lot better over the years of just being extremely disciplined in the setups that I do take. And for Bitcoin, I just don't see a obvious setup. Like looking at this chart, this is not somewhere where I'm like, I need to be long this chart right now, even if it goes higher. I don't feel the urge to be long. To your point, I think if we flip some of these resistance levels above us, a long actually becomes a lot more interesting because then you can define your risk. Right now, at best, I'm like, if you're a bull, 72K, 74K, don't really want to see it go below there.
No, I completely agree. I'm just, it's not compelling enough for me. Honestly, I don't get it. I'll sometimes the best position is no position. And a lot of people don't understand that and they'll try chasing this. This doesn't end in a good way, in my opinion. Like I just don't see a world where we chat up to 7,500 on the S&P. Like it doesn't make sense to me. So I'll just stick it out on the sidelines. I am still long oil though. I put a position back on in the high 80s last week. I don't think that trade's over.
Well, I mean, I've been telling people this for a while now. Like to me, the oil trade is like, okay, is this conflict over or is it not? And right now is an argument to be made that, we just swept out the range lows here on oil. And, maybe this is going to literally go and make a new high at 107 here on crude. And I see it. There is no ceasefire, right? There could be escalations going on over there. I know Russia and Ukraine are potentially going to be talking now. Like this to me is just cursed market environment. No interest in being like super heavy. Any trades I've taken have been very much in and out. I don't have extreme confidence in anything right now. I've gone down the list of altcoins on streams. People have been asking me, what about this coin? And like so many of these alts look the exact same to me. And really what I see is altcoins are in kind of one of these three stages, which is like they're selling off super aggressively, they're selling off less aggressively, or they're going sideways. And then there's very few coins that are actually starting to go up. I think the vast majority of coins are kind of between stage 2 and 3 here, which is the sell-off is slowing down or they're full on ranging. So if you look at like Dogecoin here, for example, super aggressive sell-off, slightly less, now it's going sideways. The good news is that, before something goes up, it has to stop going down, right? So a range makes sense here. The selling has subsided, but you really have two ways to play these coins. And, these are dealer's choice. 90% of the altcoins I've look exactly like Doge here. You either accumulate near the range lows here and your risk is, down here somewhere. And your assumption is that this breaks higher, or you wait for confirmation, which is, in my opinion, a safer play. And it's a break above the range high, confirming that this was indeed, a reversal. So that's kind of what I'm waiting for on a lot of these altcoins. And then when you look at Bitcoin and where it's at, it's just kind of hard to determine, what you want to do. And so I've been chilling, man. I've been touching grass, as we say in the industry. And I feel like I've saved myself a lot of stress and, heartache and probably some lost money by trying to force trades onto some of these charts.
If you look at my screen, we put this chart together 2 weeks ago, actually. This is the lighter chart. And remember, we drew out the slowing down of the selling into a flattening, probably going to get a higher low on the next one, right? And then we can start to see the structure shift. This is that same structure you were just talking about with Doge, right? Maybe something like this. Ideally,
and people just have they struggle waiting for that higher low or for that range flip, and they end up buying now, or they buy when we first talked about it, and then you've got to hold it, and then it chops, and then it trades back down below your entry. And I think a lot of people are putting themselves on the back foot in these trades by getting in too early, probably oversizing, and then they don't have the ability to weather the volatility before the actual move happens. All of these charts that are tightly compressed and consolidating, a big move is coming. Whether it's up or down yet, we don't know. But what you don't want to do is chop yourself up, kind of before that volatility actually finally comes back.
The Monad chart looks really good. This is probably like one of the standout assets of the last few weeks that actually has reverse trend, retested this sort of range that it was once in. And it's actually pressing into this diagonal, which I would anticipate some sort of expansion. into what could be, this all-time high. This is something
Yeah.
I'm gonna set some alerts for, and if it starts to break out, I'll probably chase it, or if it starts to tap the range again, I'll chase either side. Besides that, I traded Chip a little bit. This was an airdrop token, really low circulating supply. I'm thinking it might go for another run. I was hoping it'd be like a rave situation where it fucking, it was maximum negative funding for like a few days because people were trying to short it and hedge their airdrop, whatever it was. But it lost momentum and distributed down like 60%. Maybe it revisits 10 cents at some point in the next 5 days. But besides that, man, I really don't have anything else.
There's opportunities out there for sure, but I think I try and explain this to people like as we get longer into this bear market and the price of Bitcoin continues to drop, whether or not the bottom is in is irrelevant. This doesn't look like any Bitcoin bottom I've ever seen in my entire life. And this is cycle after cycle after cycle. It doesn't look like how we look right now. This has a lot more similarities to these bear market consolidations than it does to a bottom, which is a long multi-month drawn out process every single time. Doesn't mean the bottom can't be in, but even if it is in, I think, at best, we get a longer range here. So maybe it is a move up, but then it's a move up that, yields a move back down, and this range extends through the summer. I just don't see a bottom being put in now, and that's the peak of low, and we're going to see new all-time highs. I'm still pretty confident in the 4-year cycle idea. And as we get deeper into this thing and prices potentially have another leg down, whether or not they do, I think one of the biggest mistakes people make, if this is their first cycle, or maybe it's their first cycle where they've kept some money, is they lose a lot of that buying power and that drying powder trying to time the turn. So, you might have 100 grand here and you're like, oh my God, I walked away this bull market with 100K. I'm going to turn this into $1 million next cycle. And by the time the bottom actually forms, they've forced so many trades, done so much stuff that, they've only got 50K. And then when the actual bottom's in and the reversal is clear and obvious, because it will be, like if you go look at any of these major bottoms, I mean, go to the highest time frame available, like go to something like the weekly. Like the bottom is in here once we get a weekly uptrend. Like the bottom's in. We have a weekly uptrend here. Same thing back here. The bottom was in once we broke out of this weekly range. And we don't have anything remotely close to that structurally right now. Like this is your jam spot. This is guessing. And this feels like a lot more like where we are now. And even this is higher risk guessing. Like this is where I jammed last cycle. You can go back to my Telegram. It's like May 2023. Bitcoin is already $10,000 off the bottom. I'm like, okay, now I'm shoving because I have that confirmation. And I think a lot of people are going to get eaten up on the way down, both in time-based volatility, slow bleeding drawdown-based volatility. And it's just going to hurt your stack when, the bottom, you might not catch it exactly, but you can get in with a lot of confidence using the high time frame and just being patient. And I think that I don't see why this would be any different. Even if this is the bottom, I don't see how it doesn't end up being some sort of range where it's clear and obvious, okay, now I'm interested in trading this thing. But this structure, I just have zero interest. And we could pop up here to 85,000 and a bunch of bulls who got bullish over the last 3 days. You're like, I told you so. It's like, okay, well, why weren't you longing at 60? Like, where were you? You got bullish at 78. Now it's at 80. Like, who cares? So I'm happy to, sit on the stuff that I do own, wait and see some sort of signal, some sort of sign for a more obvious trend reversal here. But I can't take my eyes off of like what you said here on the high time frame. This just looks so orderly and very similar to every prior uptrend and downtrend we've had. So give me a significant high time frame structure break, then we can start talking about bottoms and reversals.
Yeah, by the way, guys, if you were here for our impromptu stream while we were at Coachella and you won any money from our giveaways, be patient. Kraken is a corporate organization, and there are many hoops that we have to jump through to get those payouts over to you guys.
We got everyone noted down. We shared your names with the team. It's coming, but you do not need to continue to DM Ponzi and I saying when to, like, it's coming. We let Kraken know we're on them, making sure that they follow up on that.
Yeah, I think a realistic timeline is maybe like May of 2028 for that payout. So
Yeah.
just stick
After the
around.
bottom is in and the bull run's
Yeah,
already started again, we'll make sure probably 6, 12 months after that, that we get you that money when you need it most.
exactly.
What are your thoughts on some of the other markets here? Like, I know you're long oil. Are you positioned in equities at all? I got blown out of my short, man. Like, I was like top tick Chad short here from like 69.50. I covered some of it down here, but I was not expecting this.
Yeah, I got blown out of my ES short, but I took profit on my Tesla, Nvidia, and Palantir shorts like in the nick of time overnight. I closed those perps like right before, and then things started mega squeezing. I still think Tesla looks fucking awful, and that's probably a good
We've got
short in my opinion.
SpaceX
I think SpaceX will pull liquidity from Tesla positioning
soon.
at first.
So I had a lower high idea on this. I just wasn't sure how high. I thought maybe it could get back above, 420, 440. I thought maybe even as high as here, but this might already be the lower high
I
forming
think it
right
is.
now. I definitely thought we could go a little bit higher, but we'll see. I think it was Good Alexander, I want to say. He was on Thread Guys Pod, and he is likening what we're seeing in equities right now to kind of like Solana at 300, where
Yeah,
Solana is at all-time high. We're going to see a lot of this low cap, crazy stuff go nuts, and then everything's going to die. And he kind of marks SpaceX potentially as the beginning of that end. What are your thoughts on that?
I completely agree. That's like the fucking retail liquidity event for institutions. And people are gonna race to position into SpaceX at 1.5 trillion or whatever it's gonna be. It's gonna be absolutely absurd. Might not see. And the thing is, dude, everybody's locked up for 180 days.
By
So
everybody, do you mean you and me?
yeah.
Are
Yes.
we everybody?
Everybody positioned in secondaries. I forgot we had a position there, and we're up on it, which is insane. We're up 2x, which
I'll sell you mine right now for 1.5x.
I'll buy
Or
yours for.
anyone listening here, I will sell you my SpaceX Allo 1.5x right now. It's a good deal. I'm in
Dude,
at a
so
paltry 800 billion.
it's insane. The kid we did Anthropic with that I fucking didn't write the check for 2 months ago at
Yes.
350 and now it's at 1.5 wrote in the chat like, yo, should I sell my Anthropic position? I'm up several million and it's still illiquid, but I have offers. I'm like, yeah, you should. That would be a smart move. I mean, the fucking even the secondary market is absurd right now. Nothing makes sense, dude.
No, I do think that there's still this just disconnect between all markets and like just the world right now, like what's actually happening. I'm not in the US, I'm in Canada, but at least up here, um, things are going horribly. The economy has not grown.
How's inflation
Unemployment
up there?
levels, what's that?
How's inflation up there?
Bad.
Not
Really
worse
bad.
than the US though, right?
Our food inflation is very high. Like, dude, we have the fourth most amount of oil on the entire planet. We don't have a strategic oil reserve. We're importing oil from Saudi Arabia. We sell oil to the US to refine it for us. Like, Canada's got all of these problems. And I know the US economy is doing better, but I do think that it's not doing as good as this chart would purport it to be doing,
Yeah.
in terms of job claims, in terms of just the general state of the economy. But I genuinely like, I feel like we're living through a 2008 style environment where I don't know. You know what I mean? Like I'm very old. I was 18 during 2007-8 crash, but I wasn't fiscally or financially literate like with what was going on. I was
Yeah.
playing
I wasn't
Halo.
even born yet.
Yeah, yeah, I know. You were still in embryo, I think. But I was like playing Halo with my buddies. So like I didn't know. And then you see how crazy the mania is before everything blows up. And then in hindsight, you're like, oh, it's so obvious. But even now, like being in this now, this chart to me is an easy chart to be bullish on because we're above all-time high. So you have a
Yeah.
clear invalidation. There's no reason to be bearish this chart unless it falls back within the range. But for now, you're kind of looking for like this, just kind of Like that's what the chart looks like. So, do you just keep going until the music stops? Do you take some chips off the table because you're like, I don't know? I genuinely have a very difficult time gauging, where we're going to be 6 months from now, maybe
I
maybe
agree.
even 3 months from now, and that's a little bit worrisome for me because we're kind of in uncharted territory here. Bitcoin cyclically, chart wise, to me, I feel like has to go lower before it bottoms. We're at all-time high on equities. Like it just doesn't make sense. It's different than anything I've experienced in the past. I'm going to learn from it regardless, but like I'm not super, super aggressive risk on here. Maybe that's the wrong call. But I think, we've been in this crazy risk on environment for years now. I think to your point about Bitcoin earlier, this whole trade, risk on trade, I feel like is a lot longer than in the tooth than people want to realize.
Yeah, I mean, if you had to all in a single position today and hold it for the rest of the year, what would it be?
Rest of the year?
Yeah.
Oh my gosh. That's a very difficult question. I think I would hold USDT,
I was about to say the same, cash.
like stables. I don't know, and I'd just like park it and just farm some yield. Dude, but then you see guys like, Julian Petrulius, right?
Bro, he crushed the Firefly trade.
God
Oh
tier,
my
not just
God.
angel investor, but like big swinging dick equity trades. And he's like, hey, I'm paying attention again. Like things are exciting again. And it's like
Yeah.
maybe it simply is like the monkey neuron picture, and it's like all time high, like time to be risk on. And maybe I'm just like an old washed up trader at this point who's like, I just don't have the same risk tolerance, that I used to, or desire to be as risk on at all times. But I know a lot of very smart people who are like, I'm giga bullish right now on
I think
equities.
we're probably in the blow off phase, which could last a few months, but it's where juice a lot of the fruit, and like that's where you get the proper
It's the
move.
Pareto
Firefly,
principle, right?
dude, Julian bought $9 million worth of Firefly at $19 and posted it like 3 weeks ago, and it hit 46 a few days ago. That is that's
Sick.
size one, and two, like that's transparency. Pretty boss.
Yeah, I still don't know what his like his angle is, if there is one, right? Like I think a lot of people were like, "Oh, he's like gonna sell some sort of thing." And I'm like, "Bro, why?" I mean, he's got
Nah,
hundreds of
he's
millions of
not.
dollars. He's not gonna
Yeah.
sell anything. But then now that I think about it, it's like, okay, well, he's created this brand where now he has a crazy network, right? Where he can post on his story being like, "I'm looking for $100 million of Anthropic, and this is what I want to pay." And he'll find that flow due to his network and his presence online. So it's kind of a different view. I think a lot of people who go crazy hard on the social media, like there's guys who are like him on YouTube and Instagram who are flexing this lifestyle and like, oh my God, look at all this crazy stuff I'm doing. And they're doing that with the means of selling some sort of mentorship course, whatever it is. With him, I think
Yeah.
he's like, hey, social media is like a networking tool for me where I know that there's people watching my stuff who are making money. They're seeing me deal with big numbers. And yeah, if I need to get into Anthropic, even though it's already trading at a higher price and I need to get in lower and I got crazy size, someone knows someone. And I think it's a really cool use case for, what he's doing on social media.
Dude, I can't even I don't have FOMO when I look at these charts, especially like the semiconductor charts. Like, sure, I'm not happy that I
What are you looking
fucking
at, Micron or something?
yeah, Micron and SanDisk. Like, that is how can you look at this and like tell me
This is a
now,
good time to buy.
yeah, now, we're
Because it could
talking.
double from here, dude. Like, and look as insane, and it's 2x. But that's the thing. It's like, okay, but yeah, a double from here, I don't care about nearly as much about something that's up like a
Bro,
1,000%.
2,300% in under 12 months on an equity.
that
Who did that? Was that
that is
you?
a that is a fair reaction. I'm looking at Micron right now. It's up
Ugh.
over 300% in the last 2 years. SanDisk, I think, is obviously even crazier.
Dude, SanDisk is 2,300% in 9 months. 2,300%. I just don't get it. What market capitalization is this?
Yeah, I mean, your numbers are wrong.
140B.
If you go to the 12-month chart, it's up 300% this year.
Just like, what are we doing, dude? What are we doing?
Do you put like any like, so I see like a lot of people talking about the AI trade and there being this bubble. Like, we're seeing crypto companies pivot to AI. So we've seen several Bitcoin mining companies basically say, hey, we're not doing this anymore. We're going to take our infrastructure that we have and we're going to pivot to AI. And it reminds me, I know Allbirds, the shoe company, said, hey, we're AI now. And it's like, okay, this is scam. But it reminds me of like, I think this was last cycle. It might've been 2 cycles ago where companies like, hey, yeah, we're adding blockchain to our name. And, the stock would rally. Like, I don't know, what's the saying? It's like the signs of froth will be like indecipherable from signs of bullishness, whatever the saying is. It's like, how do you know when you're in it? So easy on the outset, and that's why I'm so conflicted right now about the markets in general, and why I'm okay being patient. Is some of the stuff I see, I'm like, I don't see how this is anything but like just abject froth, blow off the top, end of times type of not just price action, but fundamentals as well. And then there's other things that I look at where it's like, okay, some of these stocks have dipped 50% and reset and all of a sudden look good again. So like there was a huge, my brother's really bullish on like some of these SaaS companies because there was this whole, AI is going to replace every single SaaS company on the planet. And it's like, okay, but like, is Salesforce really not going to pivot, embrace AI and still make a shit ton of money? It's like, yes, and the stock's already 50% off the high. Like, are you telling me this thing's going to cut in half again? Or is it more realistic that this thing is actually probably approaching an area of good value?
Is it down 50% from the highs?
Yeah.
Wow.
And like, this is like kind of an interesting chart. Like, this is an interesting chart. It's down 50% off the highs. I think a lot of the AI is going to destroy everything move is priced in now. Like, I don't think AI is going to put Salesforce out of business. I think it's much more realistic that Salesforce creates, if it's not already doing this, its own integration with AI for all of its enterprise customers. But yeah, I don't know. What do you think?
Yeah, I mean, I think there's probably a rotation trade here between sectors probably soon. But like that goes hand in hand with trying to call the top on these fucking insane moves, dude. This is so absurd. Like this is the craziest deviation SFP trap. They had me here, bro. I shorted this thinking
I remember you're like, NVIDIA's going down. I was like, I don't know, bro. It's right into support here.
It's just,
dude, I'm the same as you. I expected the bounce, but not back to the high. I just
beyond the high is my issue.
Yeah.
Betrayal.
So good. Yeah, like I look at a chart like this, and to me, it's pretty straightforward. Like acceptance above 212, you have to be bullish on it. And then acceptance below 165, it's probably done. So while it's in this range, you can either play each side or you can just wait. And I'm much more keen on waiting. I like my money. I don't like putting it in positions where I feel like I don't have a clear and present edge. And I look at equities, I look at crypto, I look at most of these markets. My edge is not super present outside of really small spots. And I know that's what no one wants to hear. Like, I assume people are like, crypto closeout, these guys are going to tell us about all the altcoins and stuff to buy. And I'm like, dude, I mean, I haven't been this disinterested in crypto in a long time. And I don't mean that long term, that I don't believe it's going to come back and that I'm not watching it at all. But I don't think that this is like you need to be staring at this every day, even though online seemingly everyone is like, oh my God, it's time to lock in. I'm like, what chart are you guys looking at? Like, is there a
Yeah,
chart that I'm
right.
not seeing that is like doing something insane? Like, people are posting every day about charts that haven't moved in weeks. And I'm like, maybe they are going to move, but like I have the luxury or at least the wherewithal to be like, let it move and then I'll come pay attention. If any of these altcoins want to show like a hint of life, like out of these consolidations that they're in, then by all means, I will absolutely start looking at them and paying attention. But for now, like every chart looks the exact same. Like
Dude,
every altcoin,
look at
except
the
for hype.
volatility we've had
Hype
today.
is the greatest asset on planet
Yes. Yeah.
Earth.
Yeah, hype is probably just gonna keep chatting.
Yeah, I mean, if you get any chance to buy this like in the low to mid 30s again, I think you just like clap it immediately.
Yeah.
But this chart looks like pretty dang good. I mean, the biggest bearish argument is like this is like some sort of three drives, but even if that's the case, I think it's just like, okay, big pullback, and then you just long this kind of more macro higher low.
Yeah,
Probably on the
hype's one of
monthly
those
there.
assets that you just like leave at the top of your mind because if there's some sort of like crisis, liquidity event headline that draws the whole entire market, down 10%, it's going to be the fastest horse on the bid side. And you
Dude,
just
it's
like
so
the moment
funny.
you see that, you don't even think, you just chase it.
Well, so many people have been asking me, oh, look at Dogecoin, check out this, check out this. And I'm like, guys, if altcoins are going to move, you're probably better off just longing hype. Like it's been
Yeah.
the fastest recovery out of every bottom. And when the market has indeed been bullish, hype is one of the top performers basically every time for this entire year, essentially. And if you look at hype versus BTC, um, the proof's in the pudding. I mean, this thing is outperforming Bitcoin on the year. You can look at this versus ETH. You can look at this versus Solana. And for the most part, hype is just kind of, shit kicking everything. So it's like, why would I look at any Ethereum based alt instead of hype? Why would I look at any Solana based alt instead of hype? And this is a really good tip and trick here, guys, for those of you that might be like new to like it's kicking the shit out of Sol. If you're new to crypto, but you're a TradFi person or you're an FX trader, you're probably pretty used to doing like cross market analysis. So you'll look at like Euro USD, right? And then you'll look at the pound, right? USD. And then maybe you also look at the Dixie. And then between those three charts, you're going to determine which of these is the asset you want to long, right? So maybe the Dixie's going down, and then you'll compare these two charts by effectively looking at euro divided by, GBP, and you'll say, okay, the euro is the better long because, this chart is bullish, which means the numerator is better and blah, blah. You can do the exact same thing with crypto. So all these things that you do that are seemingly specific to your asset class that you trade, whether that be FX, you do the same thing if you're trading equities, right? Like if you're trying to determine whether to long the S&P, the Dow, or the NASDAQ, you'll compare them all, right? And you'll say, okay, well, S&P made a higher low here, NASDAQ made a lower low, Dow made a lower low, maybe S&P is the strongest horse out of this bottom, whatever. That analysis works the exact same in crypto. So we have charts like ETH BTC, which is effectively, okay, which one of these two assets is stronger? So if this chart's going down and you want to long because you believe the market's bullish, you're better off longing Bitcoin, right? Because it's stronger based on that cross-market analysis. You can do this with any crypto, right? Or any crypto versus any asset. So all you got to do is just type in here, like you want to look at Hyperliquid, you type in hype USD and then you divide it by whatever you want to look at. You want to look at versus Bitcoin, even though this has its own pair, just for an example. The USD cancels out. This is now hype over Bitcoin. And so you now have that cross market analysis in a chart. You can say, okay, well, Hyperliquid's outperforming Bitcoin. Now, if the market's bullish, to Ponzi and I's point, you might be better off longing Hyperliquid. And you can do this with other stuff too. Like a lot of people will compare BTC versus the S&P, right? Maybe you want to know like when is the rotation when is the pain going to stop? Like when is Bitcoin actually going to outperform the S&P 500? And what you'll realize, it's been like over a year basically. The S&P has been kicking the shit out of Bitcoin since July of last year. You can do the same thing with Bitcoin versus gold, right? You can do this is the Peter Schiff chart, right? Like he'll always just compare Bitcoin to gold. And you can do this. So if you're new and like you're watching the show from the people who we had on before, interested in crypto, all of those things that you do, you can do those on crypto as well. You can compare these against anything, find the best time to rotate, find the strongest asset. I mean, this is Bitcoin over gold. So this is kind of been the story for, again, similar to the S&P since July of last year. And if you look at both charts in a vacuum, gold's been in a wicked bull run and Bitcoin has basically been topped since July of 2025.
Do me a favor, look at ETH BTC and tell me what you think.
If this isn't the higher low, we're dead. No?
Yeah, no, I agree. But that's one way to put it.
Like we're big rally, right? Out of the low. But like this needs to, I don't like you have to hold that low. Or like what are we even doing here? You know what I mean?
Sol BTC ended up painting a fucking exact fractal to ETH BTC.
Well, so this is ETH BTC, you could argue, is like right here. And it's like it's either got to turn up from here or it's just going to bleed. But
no,
this,
go back to the ETH BTC chart for the same time frame.
Well, no, I love comparing these two charts because they're the same chart. You know that meme from The Office where it's like, tell me the difference between two pictures, and it's like it's the same picture.
Yes.
This is
I would say that the Sol BTC chart is maybe like 3 months behind the ETH BTC chart instead.
Yeah, the Sol Bitcoin chart is like here.
Yes, correct. Yeah.
So much for this being, the future and ETH's dead. It's like, again, this is just, you look at any of these charts versus Bitcoin, it just makes me more and more, ardent in my stance of being a Bitcoin maxi and wishing I didn't spend so many years thinking that altcoins ever meant anything or ever were going to do anything. Like altcoins, I think you need to view them as like you're like a sniper and you're like taking quick opportunities when they present themselves, and you got to be in and out because this is every altcoin chart versus Bitcoin forever. These are two of the best performing altcoin charts of all time versus Bitcoin.
Yeah.
Any other random altcoin looks even worse against Bitcoin than these two. These are two of the cream of the crop. If you go look at some random altcoin that you thought was the new best thing, like it's a 0 against Bitcoin forever now. So you just got to be in and out with altcoins because generally, like with an altcoin, I think the mistake people make is they're playing it like it has the same cycle as Bitcoin when it doesn't. Like Bitcoin is like this. It's like 3 years up, 1 year down, whereas like altcoins are like the inverse. Altcoins go down, like go up for a year, and then they go down for like 3 years. and then they have a slight bull run, and then they just kind of slowly meander their way to 0. But you can make a lot of money in these periods of time. It's just that they don't last very long, and most people never take profit. And that's why you have accounts like Coinfession, which is one of my favorite follows on the website, where people are like, hey, like I had $1 million in this altcoin. I quit my job. I told my parents they could retire. And then like 6 months later, like I'm destitute. And it's like, dude, realize that money, change your life, take your profits. And I think that's still going to be one of the biggest disconnects from real life people in crypto is no one thinks it's real money. And then they have real money in crypto. I mean, gosh, you posted a screenshot, not to put our boy on blast, but like I think it was Rookie, right? With the PopCat screenshot. And it's like a screenshot of a hot wallet, meaning it's on their phone, okay, not even secure. And it's like $20 million of a coin called PopCat. And to not realize any of that money, in hindsight, you're like, how could you not? But in the moment, in the heat of it, it's so hard. And I think that's something that a lot of people struggle with. And if they journaled, if they wrote this stuff down, you'd be a lot better off. Like if at the start of the year, you're like, if I make $1 million this year, I'm going to change my life and everything's amazing. And then, 8-9 months into the year, you're at $1 million. You forgot about that goal you set at the start of the year. Now in your mind is like, I'm going for 5. And you forget that you've already accomplished the goal you want. You don't take anything off the table and you end up eating shit. And I can tell you this all day. You can tell people of your experiences zeroing out. We've all done it. the only way you're really going to learn is probably by doing it. It doesn't matter if I tell you like, hey man, you're going to regret not taking profit here. The only way you're going to learn that regret is by, eating shit yourself, unfortunately.
Yeah, I did that.
Bro, I did it multiple times, like
Yeah.
multiple times, both ways. Like, oh, I
Ri-
sold too early and I sold too late. Both hurt in different ways for different reasons. But you kind of just got to fucking, you know.
That's why last year I just paid myself every month, dude. I didn't care if I had a green month or a red month. Like every month it was withdraw.
Yeah, I
And
don't I don't hold any significant amount of crypto like anymore like that. Not like I used to, where I was like Flood had a very good interview with, I think it was Rasmer, where he's talking about like, you have your money in Bitcoin, you got to be willing to survive these 80-90% drawdowns. I already did that. You know what I mean? So I did that and I got to a point where I don't need to do that anymore. But if you're still in
yeah,
the learning phase, like, yeah, you're gonna go through these crazy whipsaws and these drawdowns. And I agree with you. I'm like you now, man. I'm like cash to the bank. That's where my
yeah.
mortgage payment comes out. That's where all my bills come out. I need money in there,
You don't
and
even
I'm not
own a
gonna.
fucking house. What are you talking about mortgage payment?
You know what I mean? Someone else's mortgage that I'm paying. Don't put me on blast like that, bro. It's a bad time to buy, anyways, dude. You should be divesting from real estate.
I
Um,
know.
but
Looking at
I don't know. I don't know, man. It's just like I look at
No,
the
I agree.
charts here, and I know a lot of people are pulling their hair out, like trying to trade this, and I'm like, I don't know, man. We're in this range. This was the time to be bullish. If we accept into this range here, then by all means, like get bullish again and you can target into here. But this kind of like weird in between zone is just like I don't need to do anything here. Even if we're
Look,
eventually going to go to 95, I don't mind waiting to get involved above like 82. I don't
yeah.
care.
Looking at the lower time frames, there's kind of like an interesting price action going on right now on the majors, but also
Sunday
like
night,
kind of setting up for a little long scalp breakout, in my opinion. The classic third attempt of probably like a move to this high here. I don't know. I like 24.40 for a Monday morning scalp starting tonight into Monday morning. I actually did just take this long like 10 minutes ago.
bro's filling and now he's shilling.
Yeah,
Unbelievable.
I'm showing
Unbelievable
a
chat.
multi-billion dollar asset. Hopefully my show makes it go up.
Yeah, we just need Tom Lee to pile on. He said
I
Ponzi
think
Trader's
Tom Lee is
long, therefore I'm
bidding.
deploying 50 billion.
I honestly think Tom Lee's bidding right now.
Yeah, I mean,
The footprint is very Tom Lee-esque. Dude, the beta on like these assets just in the last hour, we have 1% moves in both directions over the last hour.
I
Like
know. And
what?
dude, in Thursday, we were in a 1% range till basically 2 hours ago.
Thursday.
Yeah, like the markets did,
Yeah. This is
SFA
crazy.
for the last 3 days. And now we're coming into the market open. We're starting to get a little bit of volatility. Like, I would just like to see a expansive move in either direction. I don't care if it's up or down. I would just like to see something that gives us some sort of clear indication of direction. But for
Yeah.
now, I can't view this as anything other than like a attempted breakout of this range. So let's see if it can hold it. Like that's kind of my thought process here. It's boring, but it is what it is.
I think we get 82 before we get 72.
82 before 70. You're calling it now.
Yeah.
Would you short 82?
Yeah, I will. I will. I have to preface that by saying it depends how we approach 82. Like if we
Yes.
just creep through 82 with a sustained spot bid, I'm not shorting it. But if we get some like, wick that looks like this, but to this side, I'll short it on the way back in below. I won't,
One of my favorite things is when I do videos and I'll say, okay, like this is the level I'm watching. And people always ask me exactly what I asked you. It's like, are you going to short that level? And then you say, like, it depends what it looks like when it gets there. And they
yeah,
hate that answer because, like, well, what do you mean? Is it bearish? I'm like, because going to 82 this way versus this way is different, right? Like a
exactly.
straight line candle that goes up there and then closes as a big upper wick. I'm going to view that very differently if we just have kind of like 3 daily closes above 82 and we hover there. Then I'm like, actually, I think this looks like a reclaim. And so it's one of those things like you don't know when you underside test a level and then it creeps through. You don't know if this is a liquidity sweep and like this was a deviation or if this is like a legit reclaim until you get there and you see what price looks like when it arrives there.
This is the
And
perfect example of that. If you like
yes.
look, so you would have said like, oh, I'll bid 80 when we see 80, and then you get the reaction. But at the same time, you're like, oh, I'll see how it reacts to that same level, and then you get the complete opposite reaction. So like,
Yeah, and like
hey,
a lot of this is some of it's discretion, right? But it's just like it's repetition. Like human beings and traders, like we're pattern recognition computers. And you quite literally, after years of doing this, like I'll just like look at the chart sometime and it'll be at a level and I'm like, like it doesn't look good. And you can't explain why. And I think that
yeah,
frustrates people when it's like, well, why wouldn't you long this? You said you were going to, and you're like, I don't like the way that it approached the level.
yeah, that's
It's just like,
intuition, right?
yeah. So it is very much going to be kind of a wait and see how we get there. And I completely agree. Like this to me structurally still looks like a bearish retest, whether that's from 82 or higher. I don't know yet. But it all depends what it looks like when we get there. Like if we move up and then consolidate and then move up and then consolidate, like that looks a lot more promising than a quick move that then has, some sort of upper wick. So
Yeah.
we'll see. We'll see. But I'm hoping we just get something this week, just a little bit of volatility. I would love to move away from this kind of headline driven environment that we're in, even though crypto hasn't been as reactive lately to Trump's, 100 tweet an hour cadence. I would love to just like get away from it a little bit. I don't know, like maybe I need a digital detox, but I'm like so burnt out from just the constant feed of information that seemingly we've had nonstop for the last
It has been
6 months.
so bad the last 90 days in terms of like my headline attention span is drying out. I've been monitoring the situation for too long and my brain feels like mush. And I actually have exhaustion from reading these headlines. It's the most bipolar market reaction on a daily basis. Every headline is just contradicted by another headline within minutes of each other. And I just can't take it. I'm so exhausted of it, dude.
Yeah.
And the market is too. Like the market just, at first those headlines
100%.
2 weeks, 3 weeks ago would start to freak out. And now each headline is just, less and less impactful on the price.
Yeah, no, it reminds me of, I want to say maybe it was back here. But there was a period in time where, yeah, like Trump, or no, I guess it was the tariffs, right? Like where like anything Trump would tweet about the tariffs, like caused this huge market swing. And then after a while, it's like the market just didn't give a shit anymore.
Yeah.
And the direction was kind of already decided. And I feel like we're getting to that point now where there's just this fatigue and the headline risk of a Trump tweet nuking the market, unless it's something insane, is kind of gone, which is good. But like part of the worst part of my day, bro, is like I'm just scrolling the feed sometimes. I'm like, dude, like what do we even like? What is the world that we're living in right now with all these headlines? And I'm like, wish I could go back to a simpler time.
Dude, it's a combination of headlines, and then you see like clavicular clip, and you're like, oh, great. Like,
I saw you tweet about that where you're like, I refuse to believe anyone watches this, and I like. I want to say I agree, dude, because like right now they're doing this thing where all these guys. I saw another one. There's a guy named like Dylan Latham or something, and they're faking that they're getting into fights, and it's so obvious. Like they're like, "Oh, hide the camera." It's like, "Oh, he's getting jumped," and it's like, I'm like, this is so corny. Who would believe this? But back in my day, I used to believe like the gold digger prank where the guy would go chat up a girl. Like, hey, you want to hang out? And she's like, no. And then he gets in a Lamborghini and she like runs back. She's like, wait a minute, I changed my mind. I thought those were real. Like, and then when I found out those were fake, I was like crushed. I was like, what do you mean? Like, I used to love these videos and it was like all rage bait. And maybe we're just old, bro.
Dude, the funniest thing is like I keep saying this Dylan Latham kid get reference, and it's always like clavicular's friend. Like, dude, imagine being so washed that your only inference to other people is being a friend with another fucking insane person. Like, that's your reference point.
Honestly, the way I see this kind of live stream era ending is actually quite morbid, because these guys are filming everything and they're doing some stuff that I think is actually quite dangerous. I think it probably ends quite poorly. But who knows, man? I think maybe we're just old and washed up. And
dude, crazy comment just came in. Hot take from Trader Main's friend as I'm making that claim.
That's so good. Ponzi Trader, also known as Trader Main's buddy.
But yeah, we're washed. We're old. We're unk
We're
status.
watching. You're not even.
grandpa
You're not
status.
even. Wait till you hit 30, bro. It's
I'm
so
good,
bad,
dude.
man. It's so
Nothing.
bad. You're not even gonna want to. You're gonna start trading like bonds or something. Like
I already,
that's how
dude.
you're gonna
I'm getting
graduate.
NATO to list fucking TLT and the 10-year, and like I'm
Is it
getting NATO
actually?
actually. Yeah, yeah. It's perps, so that we can trade perps on these things.
What a horrid chart this is too. Like I've been waiting for this thing to break down for literally 2 years and just nothing. And I
Yeah, I
still
don't
think
think
this
it will.
does roll over. It's just like when and how much patience do I have? Because I think this coincides with rate cuts. But gosh, I've been betting
What do
the
you think of
yes.
cuts this year? Where do you think we're
Dude,
going?
I've bet on yes on Polymarket for rate cuts the last 4 meetings. And then this last one for this meeting, which we have, I think on Wednesday, right, is the next FOMC meeting. I was like, okay, for certain, this is the one. The market had rolled over. We had this craziness going on with Iran. I'm like, they have to cut it 25 bips. And then the market V bottomed and its new highs. And it's like, I don't see, there's no reason to cut rates. Like you cut rates when the economy and the market's in kind of turmoil. And it's like, dude, we're at all time high. Like, why would they cut rates now? I think there's even money to be made potentially on betting for like no rate cuts for the rest of the year. What, there's 3 more FOMC meetings. There's like June, July. I don't know how many more there are. 4. Like, I don't think that that's that crazy.
Yeah, I don't know. Dude, I miss trading FOMC. I used to hit, I used to think, oh, FOMC is just such a nightmare, like day every time. And now it's like, I'd rather trade that any day of the week over these bullshit headlines that we've been trading.
Well, at least FOMC, like you knew there was a trade, right? Like, so there's 6 more meetings this year. But there was a trade. So like you're either trading the FOMC move or you're trading the move after the FOMC kind of manipulation, whatever you want to call it. Like FOMC
Yeah.
spiked equities up, Bitcoin ran the range high, and they're like, okay, now it's all in short the rest of the week. Like there's a predictability about it. Whereas right now, it's just like that doesn't exist. And I feel like we've just spent the last hour being like, this is boring, blah, blah, blah. But like genuinely, I'm looking at the charts and I just like, I don't see trades here. I like the idea of
Yeah.
being bullish Bitcoin because it looks like it can trade a little bit higher. But like, if you're asking me, do I think I can long it right now? Me personally, I don't have a setup. I know you do. I know you're taking a little long off on ETH, I guess, off of this like triple tap here.
Yeah.
Um, I
Gas
see
it.
it. I see the setup totally to 2,500 basically, right? Run above that high. I get it. But like that's not a trade for me. And
Yeah.
so, maybe
If
I'm
it means
boring and I'm
anything,
washed.
dude, like 4 months ago, I was trading like 2 to 5,000 ETH position sizes, and now I'm trading like 200 to 500 ETH position sizes. Like that just
Yeah.
shows you how exhausted I am. Like I can't even be bothered with this price action, and nor do I have any conviction in it.
Yeah, no, I feel the same way, but it will return, and I think this is part of the like doldrums of the bear that I think get a lot of people out. Is it's
Yeah.
not just the price decline, but it's the volatility death, and
Yeah.
a lot of people that's when they kind of give up on crypto is when it's like, hey, it's dead, nothing's moving, it's just kind of grinding lower, it's just grinding sideways. People get very bored, and then next thing you know, all of a sudden it looks good again, but. If you're wondering what to do, when to get involved again, my not financial advice is always is like every bottom on Bitcoin has been marked with a high time frame structure change, just like every single top has. Every top and every bottom has had a weekly shift in structure. It means you're going to miss the absolute top and you're going to miss the absolute bottom. But there's very rarely a weekly shift in structure that's a fake out. They're extremely predictable. I did a video on this on YouTube. I think 90% of the weekly SFPs on Bitcoin resulted in a big move in that direction. So 9 out of 10 times it's going to work. And those are the kind of odds I like. And I don't see how this is going to be any different. There's no weekly change on Bitcoin until 98K. I'm not saying you need to wait until 98K to get bullish, but like that will be your confirmation that the low is in, just like at the prior bottom. Like once we finally made a higher high above 22,000, like that was your confirmation was the bottom was in. Same as the top. Once we broke structure below, 105, that was a lower low on the weekly. Top was in. Whether you sold there or you waited for a bounce, like it was down only after that. And Every single top and bottom has had the exact same result. And if you don't believe me, go look at yourself. Go look at Bitcoin on the high time frame, draw those sweeps, draw the structure on the weekly. It's clear as day. The problem is it's the weekly chart, and this takes a long time to play out, takes a long time to come to fruition, and that's usually what gets people is they see the weekly break and they say, okay, this is my sign to get out, and then they see a multi-week rally and they go, okay, maybe the bottom's in, and that was a fake out. When it's like, no, dude, this is a weekly structure break. This is a counter trend bounce, and for now, this is a weekly structure break. This just looks like a counter trend bounce. So happy to be proven wrong. We'll have to wait and see till we get there.
Yeah. Well, we got 50 seconds here. Anything you want to close this crypto closeout Sunday with?
I wish I had something more exciting for you guys. Like, it looks like we're going to push up to start the week. I'm still leaning towards wherever this rally ends it's a lower high. And that's a much higher hit rate trade for me than chasing up here. We already long near the lows several weeks ago. So I'm just going to be chilling. I'm going to let, price do its thing. Come to me. Not going to force anything. Hopefully we have something more exciting to talk about next week.
Yes, sir. Well, thanks for your time tonight, Mr. Main. Thank you guys for watching. We'll see you next Sunday. Have a
Shout
wonderful
out
week.
Kraken, NinjaTrader Live. This has been another episode of Crypto Closeout. We'll talk to you guys next Sunday.